Now we can talk about what it's like as an underwriter, job security, right? Like in your early days, how much would you say, like someone looking to get into this industry, how much can they expect to make, and what can they expect as their work-life balance?
Oh, well, I mean, that depends. It's very cyclical. You know, I mean, in 2020 and in 2021, underwriters, loan officers, processors, closers, we couldn't work enough hours, right? I mean, the loans were just all over the place. I know I was working 16-hour days, you know. It was the pandemic, and you couldn't go anywhere, so you may as well just have sat there and just kept on working, you know.
Why not?
Exactly. In your sweatpants and your sweatshirt, and wondering if you had changed at all in the last 2 days, or are these the same clothes I had on 2 days ago, you know. But it is a very cyclical business. Right now, the amount of mortgage loan applications is down a little bit. I don't think it has so much to do with the interest rates because, honestly, you know, an interest rate in the sixes is not a bad interest rate. I think everyone just got really, really spoiled in the last couple of years. You know, I mean, they saw rates in the threes and the fours, and they just got really spoiled. But, you know, the people buying today forget that, you know, years and years ago, interest rates were 18%. I mean, you want to gasp, you know. I mean, think about that. Think about what that kind of house payment would look like.
Right.
So now I think things are down a little bit. One of the biggest reasons I believe is just inventory. That's the thing that I hear the most. You know, I've been out to a couple of realtors' offices in the last month or so, and that's what they talk about. Inventory is just so low right now. So that's another reason why I think that we see that the mortgage loans are down. But as far as our industry, you know, there's no schooling, there's no college, there's nothing that's going to teach you how to be a setup person or be a processor or be an underwriter or be a loan officer or a loan officer assistant. So typically what happens is, you know, someone shows an interest, you hire them. They may start out as a LO assistant or they may start out as a setup person. In operations, the natural progression of that is to move into processing and then to move into underwriting. And like I said, I have a team of 10, 4 of which were actually processors within our company that stood out and, you know, got promoted from within. And, you know, I brought them into the underwriting department. And, you know, you start out underwriting conventional loans because I could just give that to you, you know, when I bring you into the department. But if you want to be an underwriter for FHA loans or for VA loans, you have to earn those designations. It's a little easier. Back in the day, you know, I had to submit my files directly to HUD, to FHA downtown to get my designations. So they were hard-earned back then. It's a little bit easier today. With those designations, you can feel like you have a little bit of job security, but, you know, to be perfectly honest, we have seen cuts over the last year. You know, there definitely have been. But as I said, it's very cyclical. It's going to turn around again. And it's going to be there aren't enough underwriters and there aren't enough processors. So, you know, when you start out at a lesser pay. And then when you become a processor, you know, you earn more money. Your salary goes up. When you move into underwriting, your salary does go up again. You know, underwriting is, as far as operations are concerned, underwriting is one of the higher paid areas of the industry. And that is because you're taking the responsibility. You know, I mean, we can always approve a loan that doesn't perform, you know, and that's the risk that you're taking. So you're trusting these underwriters. And so when you're putting that weight on their shoulders, you know, it does enable us to pay them a little bit more. We also have people in the closing department. So we have a lot of people on that side of it. And they're pretty comparable to the processor pay. So,
So someone that, for example, I don't really love people, but, you know, I like to work with people sometimes. That's, you know, because underwriters aren't working with a lot of borrowers, right? We're working with the people that you work on a daily basis. So, you know, what would you say is the ideal person for this type of job?
Well, you need to have someone who's pretty well organized. If you're not an organized individual, then you typically will not make a good processor. And if you're not a good processor, you probably won't be a good underwriter. So you have to be organized. You have to know how to balance your day and be able to work in order of priority. Because, understand when the loan first comes to the underwriting department, they're initially underwriting the entire file to give you a disposition sheet. And there may be conditions on that. And so in any given day, you have new files to underwrite, and then you have files that you have conditions on. And you have to be able to prioritize to know, well, this is the closing date on this one, so I need to do these conditions first. Or this one is a rush. We really need to get this one underwritten first. So you have to be organized, and you have to know how to prioritize.
So you said something, a condition. So what is a condition?
So, for instance, the loan may come to underwriting that has most of the credit documents. The credit report is there, the borrower's income information is there, and we know where the assets are coming from for closing. But the appraisal may not have come in yet, so we would condition for that. Or maybe the borrower doesn't have all the money for closing yet, and they're saving or they're going to be getting a gift, so we would condition for that. Many times the title work isn't here when the loan is initially sent to underwriting, because we try to get the loan to underwriting as quickly as possible.
And you mentioned, sorry, I didn't want to interrupt you or stop your role, but you mentioned being able to prioritize different tasks. What's a typical day for an underwriter look like, kind of start to finish?
Well, that's a really good question. It goes back to, like I said, being able to prioritize. Here at PRMI, we do a little bit of that for the underwriters, because understand, an underwriter doesn't really care what file she's working on. She just will continue to work, he or she, because we do have male underwriters as well. I don't mean to just say she. So we sort of, we have someone within our division who is like our air traffic controller. So he's the one that, the loan officers or the processors are reaching out to on any given day saying, this one's a priority, I got this loan from another company and I need this one underwritten really quickly, or it's a TBD, meaning the borrowers have not actually gotten a contract yet on the property. The property is to be determined. But we feel very strongly that, when someone is writing a contract and putting in an offer on a property, a loan officer will give a pre-approval letter. Well, here at Primary, we try to have an underwriter commitment letter, which especially when inventory is low and a seller may be getting numerous contracts on that property, we feel like having a commitment from underwriting would carry more weight than the pre-approval from the loan officer. No offense to the loan officer. It's just that the person that is ultimately going to approve the loan has already put their eyeballs on it and been able to say, yes, this does meet the guidelines and you're approved. And, of course, those loans would be conditioned for a satisfactory contract to sale, appraisal on the property, title work, homeowners insurance, all the things that would be property related.
Right. So basically someone, before they even go see a house, could be fully approved, not just pre-approved, right, which is what the loan officer does, but fully underwritten.
Absolutely.
And that means that when they go out and they see a house, that could technically be even better, because now instead of closing, and we have pretty fast closings. I mean, we can close in 21 days or less.
We do.
And
we've done them in less time than that.
Oh, yeah. I've had some that were less than 10 days.
Right. We are happy to work with you depending upon the situation. But, most consumers, they think I want to buy a house, and so they'll call a real estate agent. They'll go talk to a realtor first. And that may be the progression of the way you think things would work. But it's actually better if you are speaking with a loan officer with a mortgage company first, and you get yourself approved and you get that commitment before you go out and start looking at houses. And so we have a great relationship with many of the realtors that we work with that will tell the borrower that you need to be in touch with this loan officer. But if you're a consumer out there that is thinking about it might be time to purchase a home, I want to know what I would qualify for, how much money I would need, you are going to want to reach out to a mortgage company first and make a connection with a loan officer so that they can give you all of that information before you begin working with a realtor. And they can even, you could even refer them to a realtor.
Right. And I feel like every maybe not every other industry, but a lot of other industries, it's a little bit backwards where you find the product, right? Like, oh, I found the car that I want. Let me go get a loan for the car that I want. In this industry, it's, hey, am I approved? Can I be approved for how much? What does it look like? Because, again, this is something for a very long time. And then after that is when you go out and look at houses.
Right.
Or at least that's the way it's supposed to be.
It's actually, that's the best way to do it today, especially when the inventory is so low and it's so very competitive out there.
Right. Because houses are going by so quick. I mean, some houses come on the market today, and they might be gone tomorrow. So if you saw that house today and you like that house, and then you decide, you know what, I'm going to go ahead and do a loan application, and you go and you reach out to your loan officer, well, if he was missing a document or we had to get a verification of employment, it might not be right away. It might take a couple of days. Your job might take a week or two just to respond, right? We don't know. So you could potentially lose out on that home, not to our fault because we work pretty quick. We're diligent in what we do. But because getting approved for a purchase that's hundreds of thousands of dollars doesn't take 30 seconds.
No, there is some document collection that needs to be done. Although I would like to think that if an employer didn't respond in 2 days, the processor's calling again and again.
Oh,
and
yeah.
a lot of them do use Work Number now, so that is very helpful.
So it's automatic.
What's like a good idea of some information and documents to have ready when you're like talking to a loan officer?
I feel like you should definitely have whatever your pay is. So if you're W-2'd, you should have the last 2 years of W-2. If you're 1099, you should have that and your taxes. You know, you should definitely have your bank statements, no screenshots.
And no screenshots.
You should definitely have your ID. And for me, I work with a lot of Spanish-speaking borrowers. So I get a lot of people that are either here with a work permit or a resident or just got their citizenship. So we need that documentation too, right? And I feel like that's what really makes it stressful is the fact that we're asking for these documents, and sometimes people go, wait, where did I put them? Like, I now have to go find them. And now they have to figure out, like, oh, I haven't been in my bank account in a couple of weeks. Where do I go to find a statement? Because I've actually never downloaded it before. And like you said before, I mean, most people are going to do this 4 times in their life. And when we have a first-time home buyer, it's the first time they're probably even downloading bank statements.
Yes, it can seem intimidating, for sure.
So those are the type of documents that we want because we want to verify 3 things. We want to verify credit, which we'll get with the credit report. We want to verify income, and we want to verify assets. If we can do all of those 3 things, which for some people is really easy. They're salaried. They have nothing on their credit report. They have no payments, no collections, nothing, right? And they have the money in their bank account for the last 2 months. Super easy. But for some people, the money just got deposited, and it was from because they got the IRS. They have things in collections that we have to work on, or their job is not consistent, and we have to average it out. These are all things that can push it out where now we can't give an instant response. That's why those online lenders that do everything online and it's automatic, that's why not much is really we take, or everyone in the industry really takes their word as a grain of salt, because they're not verifying everything. You can't possibly know everything just by looking at a couple of documents. You know, you have to hear the story. You have to find out what's going on. So that's why when you're putting out an offer and you're using an online lender and you have someone that's using us, a whole team of people that are making sure that this person is qualified to buy this home, that's why we're winning.
Right. I believe we are.
Oh, yeah.
A personal touch.
Yep. So, Margie, what would you say is in the industry, the average income that someone can expect to make and you said there's different progressions, right? So you can start off as someone that's doing setup, and or from anywhere, right? So what would you say in all those different areas, someone that wants to know, what would you say is kind of the average for all those different areas?
I think I would be speculating. I'm not part of HR, and I certainly don't ask anyone else what they make. So I would be speculating. I think that, we bring setup people in here probably somewhere around $16, $17 an hour. I'm hoping that's correct.
Sounds about right.
Yeah.
And then, once you become a processor, it depends if you had no history in the business, and you are just going simply from a setup person to a processor, you might be somewhere around 35 to start out. But I mean, there are processors that are making, up there $70,000, $80,000, and there are some that in 20 and 21 certainly went over the six-figure mark. Once you get into underwriting and you've been an underwriter and you have experience and you got your FHA designation and your VA certifications and and you've done the training to do MMP and USDA and all the other types of loan programs that are out there, you can expect to make six figures.
So it's kind of like a lot of other industries where the more qualifications and the more qualified you are, the more you can expect to make.
That's true.
And if you're comfortable in a certain role, like maybe someone's comfortable and doing just FHA loans and conventional loans, and that's all they do. And
well, I mean, I do have a couple. I mean, I have several underwriters on my team that don't have their VA credentials. Not everyone has that. It's pretty time-consuming to obtain that. So not everyone does have that. But, yeah, I mean, I'm not really good at talking dollars and cents like that because, as I said, I'm not part of HR. Don't write anyone's paycheck. Don't ask anybody what they make. That kind of thing.
Even outside of compensation, you have members of your team that get to work remote or can work from, different states than we do business in, right?
Very true. So it used to be that we were all in the office, and then about 10 years ago, two of my underwriters, completely unrelated, that lived here in Maryland, one of them's husband retired, and he wanted to move to Florida, and she wanted to know if she could work remotely, and I'm sure, why not? We'll give it a try. And then another one, her husband was offered a new job down in Florida, and their sons were young, and they felt like if they were going to make the move, that was the time to make it. And she wanted to know the same thing. Can I work remote? Sure, we'll give it a try. It was just so ironic that they both ended up moving like in the same month. It was just crazy. So it worked out really, really well. What that has enabled me to be able to do is to hire people that don't necessarily live in our state, that, you can work from anywhere. So you absolutely can work remotely. I'm in the office pretty much every day, although I do have the ability to work from home and work remotely. I have another underwriter that does come in a couple days a week. But for the most part, they all work from home. They feel there's less distractions. They get more done. And I see that. I see that it's true because, when I'm in the office, I feel like loan officers are stopping in, asking questions all the time. But I feel like that's also a very important part of the culture that we've built here, that the doors are wide open. You can always come in. You can always ask questions. We are available to help you all the time.
Right.
So that's how it works for us.
And I'll be honest, that's kind of how I do it. A lot of times I work from home because I'm a very social person. And, when I'm here, someone says something, I'm like, oh, I chime in. And for me, I'm just such a focused person that I'm like, if I'm at home, I'm working the entire time. And, sometimes people call me and they're like, oh, I'm on my break. And I'm like, that's good. Like, what's up? What's going on? What do you need? Like, oh, no, I'm just relaxing, nothing. What are you doing? I'm like, yeah, I'm just working. Let me call you back. Because I'm just one thing to the next. Because for me, I do a to-do list, and I stay organized that way, and I go from one thing to the next, one thing to the next. And there's always someone else calling and someone else that has a question.
All good problems, Vivaldi. Right. All good problems.
Yeah. And so for me, I like working from home because I can really focus. Like, I know that I'm doing these tasks. And some people aren't as focused at home. And they're like, man, if I'm at home, I might want to cut the grass. I might wash the dishes. Like, I'm like, not me. I don't like doing the grass. But so in this industry, you have the ability to work from home. And for the most part, you can kind of pick the hours that you work as well. Is that safe to say?
No, not on the operations side. I'm from the loan officer side. From the production side, yes, you can sort of make your own hours. I mean, I'm flexible in that, one of the things that's really important to me is I have underwriters that are willing to work really, really hard, and I saw it in 20 and 21, will you work on Saturday? Will you work on Sunday? I mean, I didn't even have to ask. They would say, how many loans do you want me to underwrite this weekend? That kind of thing. So they're great. But I also want them to also know, and I do think that they all know this, that, if your child is doing something at school that you want to be part of, I want you to feel that you can leave in the middle of the day for a couple hours and you can go to that. Just let us know so we have a heads up. The really great thing about having the depth of the 10 underwriters that we have, including myself, is that we can all cover for each other. And some of us are in different stages. I mean, my children obviously are grown, so I might be going to a grandchild's event at school. Who knows?
Whoa.
But I do have some that, have young children, and I want them to feel like they can do that. So, I mean, it just runs the gamut. It just depends. I have one underwriter that gets up and starts at 5:30 every single morning. So, when we have something that is a super, super hot potato that came in the day before and we know it needs to be underwritten really quick, we'll assign it to her because she's going to have an approval kicked out before anybody else has started working, know? And so it just depends. So I can't say that you can make your own hours when you're in the operations side, because you can't, but we are very, very flexible because we've realized that, we want you to have that quality of life as well as working for us. We think it makes for happier employees.
Right.
People that are committed to you. We don't have a lot of turnover. Now on the loan officer side, you could speak to that because
we work about all the time. So Margie, speaking about the work-life balance and everything like that, for some new parents, what are some things you would say to them?
Just to stay very involved, talk to your children all the time. You want them to be talking to you. You can't just be their friend. You definitely have to be a parent, but you have to keep the lines of communication open. And I just think it's important to be there, be involved in their lives, no matter what they're doing, whether it's sporting events or dancing classes or getting involved at school and being in the plays or whatever is happening. You want to make sure that you're involved as well.
Love it, love it. So some other things about, raising kids and making sure that you're in their life. So you would say that it's definitely very important, not just to be like, oh, well, I go to the games every once in a while. No. Every single game, all the events.
Everything. You have to make it a priority to be there. But I also think, my daughters saw my work ethic. They both have very strong work ethics. And I think that they got all of that through example. So, for instance, if I left work to go do something that was with them, then once I got home later in the evening and everyone had had dinner and homework was done and everybody was settling down, I would go back to work. And I'm not physically back to the office, but I would sit down and continue my work day so that I could make sure that everything got taken care of. And I think that they saw that, and they both have really good work ethics. So I think it's important you lead by example.
Right. So it's important that your children see your work, that they see the work that you're putting in, not just like, oh, mommy or daddy is gone. They're just not here.
I couldn't speak to that because I tried to be there.
That's good.
I think I was there.
All right, sweet. So, I feel like we've touched on a lot today.
We've covered a lot.
We've covered the mortgage industry. We've covered your background, your history. We've told stories.
Yes.
Right? And we've talked about how a parent can make sure that they're being there, especially in this industry where it is a lot of times, very time intensive. You have to make sure you're there for your family, and that's something that we always try to touch on here. I feel like it's part of our culture, just making sure that everyone is, prioritizing their family. And I feel like we're all a big family here too.
We are.
Yeah. So we touched on a lot. And if anybody else has any questions?
Forgot that they were there.
I'm not seeing any.
All right. No questions. So, all right. Thank you very much, Margie.
Thank you, Margie.
Thank you for having me.